Accrued income. Accrued income is just income that people owe you, but they haven't paid yet. Keywords in the question needs to be identified, such as in arrears, not yet paid, and it is to note that for expenses it is always the contrary. If you say in arrears, then it would be a liability. On the other hand, if you're talking about accrued income, in arrears is an asset. So careful when you're dealing a question if it is income or expenses. You also need to know what is the year end. Check all the dates mentioned in the question, and you can draw a timeline and the T account as well. XYZ Limited rents out flats and tenants pay quarterly in arrears. Opening balance owed by tenants, £100. You have several cash receipts during the year, and the question is asking you what is the P&L charge and accrued income. And the year end is the 31st December 18. Keywords in this question: in arrears, owed by. You have spotted the year end here, and the cash receipts, and to which quarter they relate to. When you start the question, it is good that you lay out the information given to you. December 18 is the year end, and therefore the start date would be the 1st of January 18. Receipts. You have several dates here, and for the quarters they relate to, for example, quarter ended 28 February. We are referring to December, January, and February. This works the same for the other quarters, and to note that the last receipt was made after the year end, that is after the 31st of December 18. P&L charge is any receipt that relates to the 1st of January 18 to the 31st of December 18. From the 1st January, you will see it comes in this batch. So you have January and February 18, which is 2/3 of that £300. March, April, May are within the year, therefore fully included, similar to June, July, August, September, October, November. However, for the last receipt, only December is related to our year, and therefore 1/3 times 300. When you total up these figures, this is a P&L charge as a credit. And to note that the last payment was received after the year end, therefore accrued income is 1/3. You can use the account to illustrate the answer. If a brought forward is not given to you, then you need to think of a year back, which is 31st December 17, and the accrued income was the month of December 17. If you look back for the first batch, December 17 income wasn't received only after the year end on the 28th February 18, and therefore last year they had to accrue income for December, which is 1/3 of 300. This therefore explains the brought forward here. However, in this question, it was given to you. The next step is to reverse the brought forward. So you will credit the accrued income account and debit the rental income account. You will then have to insert the cash receipts, and this is done by debiting the cash account and crediting the rental income account, as you can see here. To note that the cash received on the 2nd of March 19 was not in the T account, as this was received after the year end, hence the last £300 received has not been featured here. The final step is to record the year-end figure, and we have calculated it as £100. Double entry is to debit the accrued income by 100 and credit the rental income by 100. What it means is that rental income needs to show the whole 12 months of income. December is missing, and therefore we need to accrue that income. The P&L charge would then be the balancing figure, and this would be the same figure as the one you have calculated here. Similarly, accrued income will be 100, and this is shown on the T account where the carried forward figure is 100. Whether to use T accounts or not is a judgment call, but I will recommend not using T accounts if the balance brought forward hasn't been given to you. Otherwise, you will have to calculate all this. Exam technique. Accrued income, you know, is an asset. Therefore, any brought forward balance would have a debit balance. Therefore, when you reverse your accrued income, you know it will appear on the left. Carried down figure is always the opposite, and hence the reason why the year-end figure appears on the right, because when you bring it down here, the brought forward figure would then be on the debit side. Therefore, in the exam, if you want, you can eliminate this account and then just slot in the brought forward on the left, just like the accrued income, and slot down the carried down forward on the right, and this is 100 in this case, just like the accrued income figure. This will give you the same answer. However, having these two accounts is the proper way to go forward. You can use a timeline to help you with the accrued income. We will focus on the last receipt, which is December, January, and February, right here. And these 3 months are worth £300. The payment was received at the start of March, somewhere down the line here, and there is a cutoff period, year end 31st December 18. Therefore, if we haven't received the amount until March, we need to accrue that income for December, therefore a third of 300. I hope this tutorial was useful for you, and if you would like to have more videos like this, then don't hesitate to let me know in the comment section.